Hi everyone, welcome back to Be Rich. It's me Vinod here today. Yesterday, one of the feedback was I tend to speak a little fast. So today I will try and speak slow. It's kind of hard, to keep pace with either should I speak fast or if I should speak slow. If I speak slow, I tend to sound like I'm lecturing and sound rather boring, I thought. But anyway, so some of you who do find this video slow maybe can do speed up like what Rupesh says, do 1.525 or 1.5 or 2 and be rather funny, I guess, hearing my voice at that pitch. But anyway, I digress. Coming back to the point today, market has corrected, and a lot of you would have seen this. And I put up a post on Instagram, which I hope a lot of you read. The question which I asked was Tuesday trivia time. I showed yesterday's statistics of the FIIs selling over 3,200 crores, while the DIIs only had bought 10,400. But the market actually moved up and gone up by almost more than 0.5%. So I was asking all of you, so then if this is the case, who's the one buying? Why is this market doing this? So a lot of you had replied saying retail investors. I'm sorry, Chief, LIC is part of DIIs. Irfan has said DIIs and Anand Sir's fans. That's true. Individual investors, retail investors, who else? Let's see, what else you guys have predicted. DIIs is not right. DII is part of domestic institutional investors. Retail. Correct. So all of these which you guys are focusing on retail is correct. Retail investors seem to be participating a lot yesterday, and that's what sent these prices in a frenzy. Today, there seems to be a lot of pressure on the market from the FIIs continuing to sell, while the DIIs seem to be supporting very specific stocks, but not in the broader market. So the DII seems to have a list of stocks which they're focusing on and they're buying in. The FIIs seem to be selling everything, whatever they can sell, they seem to be selling. And the retail investors today seems to be a little cautious and maybe stepped aside to see what is happening, which is rightfully so, because you see shares like Dr. Reddy yesterday from 1,280 or 90, it went up all the way to 3,000 odd, and today it's corrected again and it's gone back to lower than 2.5% to 3%, almost 2.85% down. Then you got stocks like IDFC Bank, which is down 1%. And then Tata Motors, of course, is down almost 5%. So Titan is also down 1%. And these are all great stocks and great companies. And Infi is also down almost 1.75%. So what do you do in these kind of situations? Well, in these kind of situations, what you do is you take your tiffin coffee box out and you look at what is available in the menu. Today, you seem to have a wider menu, more selection. The restaurant you seem to have walked in seems to be offering continental food, Indian varieties, maybe some Korean delicacies. So then you take out your tiffin coffee and you see how much money you have. And then you see the items on the list and pick carefully and wisely and stay within that range. My biggest fear is a lot of you are getting excited. Then you're having FOMO. A lot of this yesterday's retail investment probably could have been FOMO too, where a lot of people are feeling that the market is oversold and they feel like that they should step in and buy. The reason why I'm saying you should be careful is if you look at the data, see, we try and look at the data which is available to us and then we try to see where the market is going. This is a bit of a guesswork. I'm not an astrologer, as I keep saying, so the chances of it being correct is kind of hard to see. And keeping that as a disclaimer, if you look at the data, which is mainly looking at people betting in the market, if you look at foreign institutional investors, they're looking at the market, I would say, is they have a very selective bullish trend. They seem to be looking at the bank nifty, but they remain very cautious on the broader market and the broader index, and they're rather very mildly bearish is what I would say, looking at the way they're placing their bets, especially in FNOs. So they seem to be very optimistic in certain sectors, while they seem to be selling very brutally on other sectors. While if you're looking at retail investors in India, most of the retail investors, as expected, because they feel the market is oversold, are very bullish and they're very optimistic in this market and they think the index will start turning around and start moving upwards again. So that is a very positive sentiment is where the retail investors are. So they're trying to buy in dips, as they say. So probably a lot of retail investors will participate in the second half of the day today as I finish recording. And there's other set of traders known as proprietary traders, or they're called prop traders. They usually work for financial institutions and they trade for them like bank, hedge funds and specialized proprietary trading firms. So their goals are to generate quick profits solely for the firms they are working for. So these are the guys who are placing bets again in the market, and they also seem to have a very bearish trend, meaning they also look at this market very bearishly. So proprietary traders, you place usually huge bets in FNO. Then you have your foreign institutional investors who place bets on FNO. They seem to be having a very bearish trend. And so I would say this kind of a trend where you're seeing this negative sentiment in the market will continue. So if you're looking at buying into these markets, be very careful. That's why I say stay in different coffee ranges. Because let's say you had bought, Tata Motors in the beginning of the month, right? And you're seeing in the beginning of the month, it broke 1,000 and you're very happy it broke 1,000 and you think, okay, I'm making a value buy right now. And let's say you bought 10 shares of Tata Motors at 976, that's around almost 10,000 rupees. And that has dropped down to 800, meaning you have almost lost 1,000 rupees or 1,200 rupees in value of the 10,000 rupees. You'll be feeling rather sick. I can understand that. That's why I'm saying stay in different coffee ranges. One of you on Instagram had reached out to me and said, Anand had initially advised way back saying that in the beginning of the month, take a portion of your salary and buy the stocks, whatever he says into consideration, and then forget about it for the rest of the month. Then subsequently, I've spoken in another video saying that you should not spend all your tiffin coffee money on one single go and you should split it and invest in bits and pieces. Both are true advice and good advice. So let me tell you about the problem and why Anand had addressed this very clearly. Because when the market starts correcting, like I said, people who invest, let's say 10,000, 15,000 rupees, maybe 10%, 15% of their salary on the first of the month, and let's say that month seems to be a very negative month, like this month has been, already the index is down 8-9%. What happens is you start feeling a lot of negative sentiment. And you will find it very hard pressed in the 1st of November when your salary comes to take another 10,000 rupees and invest, because immediately you'll feel like, last month I followed that advice and I put 10,000 rupees and that's become 8,000 rupees. If I put in another 10,000 rupees and it becomes another 8,000 rupees and my 8,000 rupees which I put the previous month comes to 6,000 rupees, net I'm losing. So why should I do this? That voice in your head will start tickling you like that. And that's why Anand said immediately, break it into pieces. Because if you break it into pieces, you would have bought Tata Motors at 976, maybe one or two. Then you would have bought Tata Motors at 900, one or two. Then you would have bought Tata Motors at, 890, one or two. And today you might have bought Tata Motors, one share at 830 towards the end of the month. So you've been buying Tata Motors like this, and psychologically you feel very proud of yourself that you saw the opportunity and you did not jump at it, that you are staggering yourself and you cost average and all these things you'll tell yourself psychologically, and you'll feel very confident going forward in the next month that you'll start looking at Tata Motors at 830 and you'll continue doing this, right? And that's why Anand said to take that approach. If you have true belief in value investing, if you have true belief in compounding, and if you're in the market for 15 years or more, that's where you plan to stay, then this kind of cost averaging doesn't matter. You tend to win in the long term. As long as you're buying in value, right? A price difference of 30 rupees, 40 rupees does not make a difference. Even a price difference of 100 rupees will not make a difference if you keep consistently buying over a period of 10, 15 years, right? Because you keep on, every month you'll keep investing and you keep sipping and you keep carrying on. This is not a problem when you're doing mutual funds. This is why mutual funds, for a lot of people, it works. Because what they do is, they turn on sipping into an automatic sipping with their bank, which, let's say you have HDFC Bank or ICICI Bank, you're investing through them and you've turned on this automatic investing. So every month your salary hits the account, automatically so much percentage goes into your mutual funds account, and that guy invests it, and you don't really bother tracking it, and you don't even bother looking at the news. So that if you have that kind of a mindset where the swings of the market affect you tremendously psychologically, then maybe you should look at that kind of investing. But if you do have faith in what you do and you believe in what you're studied and researched, then you can continue doing, and all this really doesn't matter. Every time the market dips, it is more opportunities to buy, as long as you're buying in value. That is where you keep looking at the PE, as long as the PE makes sense and everything else hasn't changed fundamentally about the company, you keep looking at it. That is why if you look at even Dr. Reddy, when it's going down where it is today, it's at down 3% at 1,272. It's fabulous. I mean, if you're looking at this as a long-term buyer, it gives you an opportunity to enter. The PE is already broken and it's come down to 18. Just 2 weeks back, when Dr. Reddy was trading at 6,666, we were all like saying, it's very tough to buy Dr. Reddy. It is very tough. It's so hard. It's so expensive. It's way out of our different coffee ranges. And some of you, though, went against my advice and started doing this arbitrage, thinking that if I buy and the share splits, once it becomes intrigue level, becomes easy, lots of retail investors will flood to Dr. Reddy, and then Reddy will bounce and I can make an arbitrage there and make some profit, and went and dumped some savings into Dr. Reddy and bought it at 6,000 rupees, and suddenly after post-split it is corrected like this, you must be feeling little pain. Fundamentally, Dr. Reddy is a great company. If you bought it at 6,000 or you're buying it at 1,200 or 1,300, it is still a great company. It's a great buy. There's nothing wrong with it. There's more value at this point than it was there at 6,666. That argument is true, but you're still buying a great company. So keep this in mind. This is same applies with Tata Motors. The last thing I want to talk about, which I'll do another video with Shashwat separately, would be there's a whole bunch of companies which are coming up for buybacks and bonuses, and one of them is TCS. TCS is talking about buyback is what the news is saying, and how should you do this play when it comes to TCS, considering all things in the market when it comes to IT sector and software and where it is sitting right now, and the whole sectorally looking at it and specifically breaking it down with TCS. I'll sit with Shashwat and discuss further how you should play with TCS. Because last time the buyback was done, Shashwat made a play for it. So I thought I'll pull him in for that video and let him explain what happened with that play and what was an end result for him. And though it didn't pan out the way he wanted, he still is a happy man, and why he's a happy man. And that is a very specific case about TCS and usually doesn't apply to other companies. So I want you to keep that in mind, and we'll do a compare and contrast with other companies on that list. So keep an eye out for that video. Probably it'll come sometime during this week, maybe Thursday or Friday is when I probably get that video out. Probably closer to your Diwali. And Diwali video also, my team is asking me to focus on the so-called Patas list. So maybe we'll do some Patas list on Diwali day. So you'll have something on Diwali night to enjoy. I do not know if we will do this on the night before Diwali or on Diwali night. Rupesh, my producer, will decide this and he'll let me know. So you can look out for that too. That'll be something interesting for you guys to watch. Anyway, this is what I broadly wanted to talk about today. I wanted to give you strength and confidence in yourself. Do research, do understandings, and do analysis and find value. And when you see value, bet, that you know yourself. Bet for yourself, count on yourself. And invest wisely based on that and stay within your risk range. And like I said, psychological factors play far more than economic factors when it comes to investing in the market. Thanks for watching the video as always. Do like and share, and do send this to people who might find this interesting so they can also enjoy this kind of content. I'm always available on Instagram, especially in the 52-week challenge group is where I get to really interact with you one-on-one. I've been putting up some questions and some facts and discussions there, which we have been having, which has been very entertaining. And sometimes the questions I do ask there, I do pull them out and ask my brother in the Tamil channel, the sister channel, for him to answer. So if there are questions which you think would be very interesting for the wider audience, do drop them there. And if I manage to pick it up, I'll definitely ask my brother about it. Once again, thank you for watching the video today.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.